that could land you in jail. All right. And we are cranking out in 3, 2, and 1. Welcome to the Make More Money podcast, where we are full of regrets today.
Full of them. We're definitely full of it.
We're full of it. That's for damn sure. So I have to come out with a
You're coming
retraction.
Out? Congratulations!
I'm
about time.
This is hard for me. Let me get through this. Okay, this is a point of shame.
Just breathe through it. Breathe through it, Stephen.
Okay. On last week's podcast, I came very much out of character, and I just jumped the gun. I jumped the gun. It's my fault. I said something nice and authentically nice about a politician.
Big mistake.
Huge mistake.
That's what you get for being nice to politicians.
Joe, and I'm not talking about Biden. I'm talking about Manchin here, a different Joe. I said that, thanks to him, we blocked this bill. It was, what was it, $1 trillion, 1.2 trillion.
Something like that. Yeah.
Build Back Better, Best,
Budget, Best Buy, Bed Bath and Beyond.
A whole lot of B's in it. What it had a whole lot more was government spending that would continue to drive up inflation, which is we're already struggling with. So,
which for the record, I was actually for that bill, but that's
it. I'm not. So,
I mean, if we're going to go in on just big spending, at least give it to, some sort of infrastructure and all that.
Do you know how much was
corporations?
Do you know how much was in of the 1.2 trillion was actually dedicated to infrastructure? It was less than a third.
Still much more than they've done in the past.
The only thing is building back better was Nancy Pelosi's next mansion. So
mansion.
Yeah, mansion. He probably didn't get a big enough mansion, which is why Manchin decided to do it. The point is, they freaking said, he came out today and said he would support a new bill that reduces the deficit, which is so misleading because it's not reducing anything. We're still spending more money. This is like your wife saying, hey, honey, I saved this money because I was going to spend $1,000 at Target, and now I'm only going to spend $750 at Target.
Yeah. Or as I had an ex of mine that used to love to say this until she learned better. And it was, I made money. How did you make money? Well, it was buy one, get one free. So you still spent money. Well, yeah, but I made money because I didn't spend everything I was going to spend.
Yes, that's exactly it. This
perfect.
These
logic.
are the idiots.
Perfect. Well, I don't call
okay, they're not idiots. They know what they're doing. Yeah. They're playing to the press. We're the idiots. We're the ones that keep voting these people in. But the reality is this: they are going to try to push forward now for a $750 billion plan. Dear God, I hope somebody else steps up now and just goes against party lines, because again,
well, there's still a chance, because he could say that he agrees to it, and then when it comes to a vote, nothing's going to happen.
I know. That's what I hope for. So look, at the end of the day, Republican, Democrat, Independent, what screws over all of us? Inflation. It's just as simple as that. So we've got to keep this down. The Fed just came out. I know we're going to talk about this a little more. Raised rates again. Like I said, screw Manchin. But before we get into that, talking about inflation still, that's just one way that
I'm
we're
sorry. No. I want to go back and just to put a nice little bow on that last statement. Like, we just have to all take a moment of silence and just say you were wrong. And that's what you get for being nice to politicians, Steve.
That's it.
Just take it in humility. In humility,
you were wrong.
I
will not say anything nice unless it is dripping in sarcasm more than my Waffle House pancake or Waffle House waffles are dripping in syrup. I mean, absolutely. That is it. Yeah. We're done. We're done. We're moving on. Good. No more nice things. Except for the governor, Newsom, out in California, who is going to be giving a whole bunch of people a bunch of stimulus checks straight back to their pockets. How nice of him.
Yeah.
Did you guys get it? Dripping.
Well, what I mean, how about your favorite governor in our current state, DeSantis, who's doing the same thing? It was very much against the stimulus checks, but is actually telling people now, I'm going to give you stimulus money that's coming from the pandemic stimulus that he was against.
Like I said,
there's no
there's no winners. There's no winners, just losers, us. Yeah. Okay, so at the end of the day, right? So all of that being said, speaking of government, I can't wait to see one of the greatest moves that President Joe Biden made was coming out in April, I think it was. He announced AKA Ministry of Truth. I think it's called the what was it? The Board of Disinformation, or the Disinformation Board, or something like that. The point is, we like Ministry of Truth better. Shout out to George Orwell, the book 1984, and basically, their job is to prevent disinformation from getting out in mass. The Disinformation Governance Board. There it is. You can go look it up. Disinformation Governance Board.
DGB.
So they came out and spoke against the fact that the government is trying to change the classical definition of a recession, which is 2 consecutive quarters of negative GDP. That's pretty standard definition. We've continued to use it. And they came out and did their jobs well and made a big statement that, have you found it yet? I know you were looking for it on the internet. The statement, the Disinformation Governance Board rejecting the changing of the definition.
I was
of the
just
recession.
Googling stuff. I wasn't looking at anything.
Okay, so we can't find it on Google. But surely they would come out against this blatant disinformation, right?
Yeah, you would assume.
Yeah,
but
I'm sure they made a statement somewhere, right?
You would think.
You would think. We just can't find it anywhere on the internet.
I've looked.
Okay,
nothing.
I've looked too. I can't find anything. Okay,
and I'm good at the Google. I'm very good at the Google.
Well, I'm sure they're working on a statement.
Yeah.
Saying that, hey guys, a recession actually is exactly that. We have a definition that is what it is. So we'll just give them a little bit more time. I'm sure they're just wording it properly
in the next month, year, or something. I mean, because clearly they're not going to want to rescind their statement that we're not going into a recession,
right?
And that there is no inflation,
and there can't be any political blowback on the fact that they would be coming out exactly against the president who said he doesn't want people changing the definitions of things and putting misinformation out there. That wouldn't be good.
No. With that said, we transition into we are not in a recession, guys. Apparently, they changed the definition, and I mean, to be fair, classically recessions are, they're labeled by an independent group of economists that somehow now disappeared and decided that although it's always been 6 months,
must have been friends with the Clintons.
Yeah,
so
classically 6 months of decreased GDP and inflation indicates a recession, but not this time. Not this time.
And by classically, we mean
every other
that
time.
Happened as of a month ago for the rest of history.
Yeah, but not this time.
No, not
so
this
congratulations, we are not in a recession.
Yay.
Maybe
a friend of mine said this is like moving the goalposts, and I said no, this is not like moving the goalposts. This is like saying
we're playing hockey now.
This is like saying we don't even know what the goalposts are. And I mean, because they didn't come out and give us a definition. They just said that's no longer the definition because experts said it's something else. Well, what's the something else? They didn't even give us that.
Yeah.
So, they said something about corporate profits being the reason that it wasn't right. Yeah. Well, I didn't know that corporate profits, were helping me buy groceries. Did you know that?
I could have sworn we're not all doing profit sharing.
No, when I was working at Salesforce and, they were putting a $70 million screen in the new building and I was getting a 4% raise after being one of the top performers on the team, I didn't know that I was actually entitled to all these extra billions of dollars that were fueling the CEO's jet as a corporate expense. Yeah. So
I love this. I'm going to put a quote here from AP News, a somewhat reputable of the very few or any reputable sources. And it says,
it's better than CNN, whatever that's
worth. The GDP report, this is the gross domestic product, for the last quarter pointed to weakness across the economy. Consumer spending slowed. So the normies, us, we all spent less money.
We're not spending money.
Okay. So we bought fewer goods. Americans bought fewer goods. Business investment fell. So retail investors actually invested less money. So we're not buying goods. We're not investing as much because, we don't have the money.
Everybody's sitting on cash. This sounds like it makes sense.
Inventories tumbled.
Okay.
As businesses slowed their restocking of shelves.
Because people aren't buying stuff. Okay, this all makes sense so far.
So far. And then we shed 2 percentage points from the gross domestic product.
Okay.
All classic indicators of a recession. But
classically.
But wait. Somehow, corporations posted the highest profits ever.
You must have read that wrong.
No, it's record profits.
Record profits?
Corporations posted record profits.
But that doesn't make sense because you just said people are buying less, businesses are investing less.
Yeah.
Stocks are down, or not stocks, but
retail investments and all this stuff is
all
down.
this stuff is down.
Yeah.
So how could they be posting higher profits?
I think there's a word for that. I mean, and this, I have to be careful legally because I can't say gouging, but along the lines of price gouging, which would be illegal in every other respect. But in this case, maybe not. Maybe
it's almost like during the pandemic when it was really hard to get materials and access to things, and that drove the prices up. Now that it's getting a little bit better, we're not completely there. But now it almost seems like instead of bringing the prices back down for stuff, did all these corporations just keep everything equally as expensive?
No, they actually kept increasing.
So they actually made it even more expensive, even though they could have made it cheaper in order to make up for the losses that people weren't buying more, and managed to get record profits from that.
And continuing to increase profits. So to put it in perspective,
sounds pretty evil.
If you look at the actual corporate profits after taxes from 2020, before the pandemic, I'm not even talking about the depths of the pandemic. Before the pandemic, corporate profits have increased 40% from that normal.
Oh my gosh.
40% in the last 2 years, while people are spending less money, people are buying less goods, or correction, I should say people are buying less goods. They're spending more money.
Well,
because things have gotten more expensive because the corporations are gouging.
Let's give a perfect example here. Okay. Everybody who is paying attention to the markets knew that for a little while there, wood was worth more than gold, right? Like lumber was getting absolutely insane. They were locking it up at Home Depot. Like it was getting weird there for a bit. Skyrocketed, came back down significantly. Well, guess what? The price of new homes just in our neighborhood that you and I live in, right?
Yeah.
Guess what? They keep going up. Well, if the cost to build those homes has gone down, wouldn't the builders take that into effect along with all the other economic conditions
and start bringing those prices
down? Apparently not.
Nope. No. Again, they use the excuses initially, and then they keep padding their profit margins.
Exactly.
And then they keep giving the sob stories of like, well, no, guys, it's the labor shortage and it's this and this. I'm sorry. You're not struggling like everyone else. You're posting
and this
record profits.
And this isn't this is coming from the what was the source on this? We got to talk about the source. This is the
hold on. This is the actual the Fred economic data.
Fred economic data. Okay. So this is third-party economic research, and this is across all industries. This isn't like, oh, that's just tech, or oh, it's just retail or anything. This is every company across the board, basically. The average of all of those things. So it's crazy.
Yeah.
So we, the people, are getting screwed twice. Okay.
We're not allowed
when
to
Jeff
use pronouns,
Bezos, one of the richest guys in the world, gets on and starts tweeting, at Joe Biden, because Joe's like, hey, the corporations are doing this. And he's like, no, that's not it. Guess what? They're both screwing you. Yeah. Okay. Biden continues to put forward these things, spend the money, and drive inflation through the freaking roof. The Fed then has to counter and raise interest rates to drive us faster and faster into maybe a recession. We don't know. It's a recession, guys. Okay. And then
not if you don't put the label on it, then it's not a recession.
Okay, great. Well,
get on it.
That really worked with girlfriends in college. I mean, look, I don't want to put a label on this, even though we've been together for 3
years. It's a fear of commitment.
Yeah.
It's a fear.
They're terrified. So we're getting screwed on that. Our dollar's becoming worth less. And on the flip side, it still costs me $15 to go out and just get a sub and a soda because we're not dropping the prices with how much they're going. But what do? They're laying people off.
Well, it's funny because one of the arguments that they're saying as to why we're not officially in a recession is because payroll's going up because they're still hiring.
Right. They're still hiring.
Except they're not really. I mean, I've done my own personal research recently.
I mean, look on LinkedIn right now. There's layoffs. People are posting all the time. I was just part of the layoffs. I'm looking for work. This is happening everywhere.
In the tech specifically, I mean, we're talking about 30% across the board of layoffs.
Yes. Yeah.
And they were one of the highest, groups that was hiring before. And this is part of the issue where GDP and all these measurements are in arrears. They're, looking at months back It's like, well, yeah, if you're looking at 2 months ago, 3 months ago is when they were still hiring. But right this instant, as of last month in June and July, they're doing massive layoffs, they're doing hiring freezes, and they're not hiring anymore, which is a hiring freeze. I know, I get it.
Yeah, I know.
So technically, yes, we are in a recession because all of your arguments, except for corporate profits, is indicating a recession. But let's not put that.
And isn't it kind of just? It's just so funny to me because that was literally what people who voted for Joe Biden. Like, he was on the side of the blue collar worker. He was, Joe, I'm on the side of the working class. Like, that was what he's made his brand politically all about.
So, but you know what? I'm going to back him up in this situation and say, you know what? Maybe this is the better alternative. Maybe with someone else, it would have been much worse. Maybe it would have been 80% record profits.
I'm not saying that's not we should have put Trump in statement or anything like that. That's just that's what this guy.
For the people not watching that was me shaking in revulsion and fear. I don't know.
That's because you're a pussy. Anyway, no, but seriously, I know your butt puckers every time a mean tweet comes out. But the point is this:
just the prospect of another Trump campaign. Gosh,
hey, the hairspray stocks have been down since he's been out of it.
And tanning,
but the point is this: it's just one of those things to where when you look at it, it's just surprising. I'm saying from a brand perspective, because you would think that. And it's showing, with some of the lowest I think, what was it that I came out? He has the lowest approval ratings of any president at this tenure of their presidency, since they've been polling that. He's at like 34%. Right. Depends on who you ask. But however long that particular poll.
According to Fox and then CNN says the point, it's 36%.
But it's just like if you were going to try to get elected, it's like you'd think you would play to the base that you'd been in politics, pandering to for 47 years. And he just completely abandoned it. So it doesn't matter. Point is, now that we've given all, and sorry guys, look, we're just stuck in crazy time.
For the record, Harry S. Truman had 32% approval ratings.
Oh, okay. So I thought he had really low approval ratings because people hated the Harry Potter glasses. So they're like, listen, man, that's been done, Truman. Okay. So
actually, you know what? We're right on par. He's right on par with Donald Trump at 34%.
Oh, okay. So he's trending pretty strong. Oh, damn, Carter. No, look at Nixon.
Well, yeah, I mean,
that
was back when people actually cared, when your president lied to you and defrauded the people.
Now it's just part of getting elected, so we just take it for granted. So, all right, so all of this, we know we spent a lot of time just going through a lot of these big updates. The reason that we talk about this on the Make More Money podcast, this is not the, why politicians and corporations are screwing us over podcast. It was way too long of a name. We thought about that one.
Yeah, it was. I mean, a whole mouthful, and you don't want a mouthful of politics.
No,
or politicians.
No.
Never mind.
Yeah, we call it Weinsteining. Yeah. But oh my gosh! By the way, speaking of Harvey Weinstein,
just splashed my face.
He splashed a lot of people's faces too. So. The Joe Rogan podcast, listened to it this week with Andrew Schultz, one of the great comedians out right now. And dear Lord, did not realize that Harvey Weinstein had a medical condition down there. One of the most disturbing things I've ever heard of. I'll just leave it at that. Go check it out.
It starts with a micro. Is that the?
No. Rot. Yeah, I'll leave it at that. Like
gangrene and such.
Essentially.
Yeah.
It was
necrosis.
All right. People will do.
Let's move on.
The things people will do to get famous. Took it to a whole new level for me.
Yeah.
Anyway, So moving on now, going into it, we talked. Did we talk about home sales?
Not yet.
Not yet.
About that.
Okay.
Oh, let's before we move on to that, before we tootsie roll way out of it. The whole premise of talking about this stuff is
right. Sorry,
so that
got on the Weinsteining.
Yeah. So like. It's not about the politics, not about this. It's about staying up to date with the news so that you know what's happening to your money.
Right.
It's not about, I just want to know how to make more money. If you do, then I'm sorry. We will get back to that in a second. But it's understanding what's currently happening with your money so that you know what to do with it.
And what's real. Look, we are sifting through the BS of the news media for you. We're going with the most legitimate news sources and data that we can find. you guys aren't going to the economic development, of research and like all this other crap. You're not going to those websites. We are. That's why we do this podcast, because there's so much data out there. There's so many numbers. The source of this data is incredibly important.
Correct.
So we spend this time talking about it. And yes, we get onto the politics right now because things are just a little extra crazy compared to the normal crazy.
Yeah.
And it's just one of those things that it's important for you to be aware of these things, because if not, well, honestly, we're just going to keep making the same mistakes that we've made historically.
Correct. And one of the things that distinguishes the quote unquote smart money, which is the hedge funds, the banks, and all these things from the retail investors, which they call the dumb money, is the knowledge base. It's
right,
knowing the actual data. And right now, I mean, I hesitate to put it all out there like this, but the data is being manipulated. We are getting like the media is telling you one thing. Yeah. So again, what we're trying to do is hopefully educate in a certain way so that that when you're being told there is no recession, you don't go out there and start investing left and right without doing your due diligence and research. The point is, look at what the smart money is actually doing. The smart money is betting on the fact that we are in a recession. They are still waiting for the bottom of the market. What they want you to do is go out there and throw your money away so that they could continue to make more and more money while you make less. We're here fighting for you guys. We're here fighting together, saying, no, let's all get informed together. This is the real news. Now let's make more educated decisions.
Okay. So we've got this new cool little tool that we're using. I'm throwing up this chart. This is Gallup poll. Okay. Mm-hmm. Very trustworthy source when it comes to polling and different things like that, data selection. We won't get into how that could be manipulated, but for the most part, we tend to trust Gallup. Okay. Americans' confidence in newspapers and television news. Look at what this has done. It's never been in particularly very high, but oh my gosh, look at this. We are down to 11% in television news and 16% in newspaper news. That is a huge problem for these news cycles, because unfortunately, they're not being, one of the big problems with journalism nowadays, and you will hear journalists say this, is that staffs are being reduced, budgets are being cut, and they're not able to go and do the job that they used to. They can't actually go do true journalism. All this is about clicks. Now, don't get me wrong, journalism has always been about making money too, but there was also, to a certain degree, a level of putting out the truth.
Yeah.
So, or some level of accuracy. At some point, I heard about this. I didn't realize this, but Gawker changed everything. That was an independent site. They would put out news, and they were one of the first ones to actually, before you would have ratings that were done on a per show basis. Gawker was the first one to come out and make it on a per segment basis. So you might have 4 or 5 different segments in a show. They came out and said, no, instead of just the entire show, we want to know what the ratings are every 3 to 4 minutes when we're covering a specific thing. That changed the entire game. And then all of a sudden, it was literally just about capturing audiences for a couple minutes and then putting out what they want to hear versus what they should hear. So, interesting thing. It is, I mean, this is probably somewhere in line with like China and how much those people believe, what's coming out of there.
Well, good thing we now have that, Ministry of Misinformation.
Thank God for the Ministry of They're going to be freaking busy.
The disinformation, what was it again? I already forgot the whole
I know, right?
Of it.
I know.
Disinformation Governance Board. There we go.
That's it. So,
all right.
Well, so the point is, moving on, we just want you to be aware of these things. They're really important. So now let's get into the part of the podcast where we actually talk about making money.
Yes. Yeah. So moving on.
All this context included.
So what do you want to hit next? You want to home sales?
Yeah, let's talk about home sales, because there's a lot of people out there that are either looking to sell their home, they're looking to buy a home, one of the two, and the cliff has finally arrived. We're going over the waterfall's edge.
Yeah, I mean, and especially when we're talking about the Fed raising the rates by 75 basis points, which we'll circle back on because that's a bigger bit of news because it's affecting the market. I'm actually getting this question a lot by people that think I know what I'm talking about. And it's the, is now the right time to buy a house? Is now the right time to buy a car?
Right.
I mean, what does this all mean? And as an indication of where the market's going in recession, well, pending home sales have actually fallen 20% in the last month. So for those, genius economists out there that were saying, oh no, there is no real estate market bubble and it's not going to pop. Well, we're at the very least hitting a stagnation point.
Yes, absolutely.
Realistically, stagnation, it's probably going to start to reverse. I'm not saying it's going to be a full bubble pop, but rates are continuing to increase. So it's becoming more cost prohibitive to get a mortgage, to finance. So, where people before were getting mortgages left and right, financing their cars left and right because it made sense because you were at sub 3%. Well, when you're at 6, 7, 8%, now people are going to be a lot more hesitant to buy a house, buy a car. And we're seeing the evidence of it now with the pending home sales falling and new home sales decreasing as well.
Yep, exactly. So right here, we see a tumble in June, pending home sales index down 8.6% versus a forecast of a 1% drop. So, I mean, I don't know who's doing these forecasting. They should be fired.
So, I mean, and this is where data could be manipulated. If you really wanted to and make this even scarier, you could say index is down 800% more than forecasted.
It is
because it's 8.6 versus 1.
It is. So, it's pretty damn bad.
860%. But
so that's what's going on. If you were looking to sell your home, I mean, if you really have to, if you're moving or whatever, go ahead. Good luck. You're not going to get as much as you were going to get for it 2-3 months
or you're going to see your home on the market for much longer, where homes were being bought and sold in a day.
True.
Now people are going to be a lot pickier. So if you're posting, and again, this is all seasonal, it's cyclical, and depends on this in the area, because you're going to start seeing it in some markets much more than others. But again, even in our area here where we live, homes were posted for a day and they were sold. Now I'm seeing actually prices going down. I saw a couple that were being dropped in price by 5% already in order to sell because they were being posted for over 35 days.
Right.
So, I mean, again, that's an indicator we're back to somewhat normalcy and prices are going to start.
Yep. The days of listing your house and just having crazy bidding wars and lines out the door, it's not going to happen anymore. Supply is going up, and at the same time that, and I'll be honest, I don't really understand that. It was like people waited for the rates to go up to really start listing their homes. Like before that, they kept it really low. So a lot of people just missed the market on that one.
Well, I mean, and it's funny because again, the other argument against a bubble burst is the statement like, oh, well, people still need homes and the supply out there is much less than the demand. So people are still going to be buying. Well, the issue is, again, as rates go up and as, costs are still not all the way at the bottom, they're dropping, but it still costs money to do this. The new estimation is that new home builders would have to continue to build homes even as people stop buying them in order to make up for, the supply and demand issue there. And they're not going to do that. So ultimately what's going to happen is that they're going to stop building new homes because they can't afford to build them unless people buy them. And we're going to hit a point, a crux where it's going to be a breaking factor. Either prices are going to have to go down to entice people to buy homes again, or nothing's going to happen. We're going to hit that stagnation period again where it's a stalemate. They can't build because no one's going to buy. No one's going to buy because they can afford it.
Yep. So moving on to the stock market, I want to talk about a stock that I actually bought this week. Mm-hmm. So, and I had been going back and forth on this. So the one I want to talk about is Coinbase. So with Coinbase, I'll put this up on the screen here. One of the reasons that I had held off on it for a while was, number one, when the IPO came out, I said, this is incredibly overvalued. This is ridiculous. So the market cap on it was absolutely insane. Didn't want to buy it. And then over the subsequent months, it continued to tank along with everything else. Really, really bad. It's down, depending on what time you look at it, 80% from its high or something like that. So the reason that I got into it now was because of this chart. It is very closely tied in recent, and this granted only goes to December, but the trend, still follows pretty closely into this year. I just couldn't find one that recently, but a friend of mine had sent it to me. The price correlation, for the most part, you have a little bit of a decoupling right here, But for the most part, it has followed lock and step, as you can see from a return perspective, with Bitcoin. So that's just something that's been really interesting, because I'm like, well, do I just buy a crypto or do I buy Coinbase? And at the end of the day, I have different pots of money for crypto, for stocks, and my expectation of return for crypto versus stocks are very different. If I get a 5% return on a stock, in a short period of time, I'm pretty happy with that. I get a 5% return on a crypto, I don't even blink. I'm not excited at all. And I know you run into the same thing. And it's just because we have different levels of expectation for it. So when I look at this being down 80% from its highs, will it ever get back to its highs? I don't know. If it does, it's going to be a very long time. But I don't need it to, because where it's at right now, when trading in crypto, you had that Disney news with Matic that kind of triggered like a big rally there. Bitcoin and Ethereum and everything else kind of follow place with a little bit of a rally. Coinbase jumped like 30% in a couple days. What that told me was that people still believe in this company. They didn't have any bad debt with the whole Three Arrows incident. That was a really big deal. So they're relatively safe. And I think at its current valuation, to expect it to double within a year or two, when things start to go back and when people start to trade crypto again, I feel pretty good about that. And 100% return on a stock, that's something I would be extremely happy with. So,
I mean, one of the things to kind of chime in there and piggyback on that is, when we're talking about Coinbase is essentially a brokerage company for crypto. So they were one of the first to allow people in mass market to invest in crypto. The reason that you start seeing a lockstep is because people start associating psychologically Coinbase with Bitcoin. The good thing about this, where you start seeing that fluctuation with news of crypto coming out, is as all these other companies that were tied in with the 3AC collapse start kind of fizzling out and people start losing faith in them, they go to the grandfathers. They go to the Coinbase, which was the original, the safer, nothing's safe these days, but the safer bet. And it's not just the benefit of potentially having, Bitcoin go up in time because they're an investor in it, but also the fact that people are going to continue to invest in crypto and go with the companies that they trust for that. And right now, Coinbase is that. With that being said, I haven't bought any Coinbase, and honestly, I probably won't anytime soon, because I differ on that a little bit. But I see where that logic could lead you, and I get it. I mean, if we're going to look at the all-time highs, it's down. I mean, the all-time high was $369 just about, and it's down to about $60 right now.
Right. So I just did the math on it. 84%.
Yeah, it's down 84%, which honestly is potentially good news, because that means it's got a lot of room to grow.
Right.
Like even if it only goes up to a quarter of what it was before, you're still making money at that point.
Well, again, look at this. And like I said, this is kind of what changed my mind. We were kind of hitting, pretty close to some lows here for a little while. And then all of a sudden you just get a tiny little bit of good news from, the crypto community. People start trading again. That's where they're going to make their money. Well, I take that back. They're going to make their money with that, but they do have a subscription service now to where you can pay a flat rate and get free trades.
Yep.
That's a pretty big deal if they can really grow that base, because subscription models, is a really solid thing, and it comes with $1 million protection too in case of a hack.
That's nice.
So it's not a bad deal. So right here, that news triggers, you start seeing the activity, and within a couple days, I mean, look at that rally. That's a huge rally from 53 to 75. Now, the government screwed it up and came out with some news about a potential crypto bill, and that drove this thing right back down. But like I said, if you can see that fast of a rally on that much minimal news, that's where I looked at it. I said, even if in, a year or two, when I believe crypto is going to be a lot hotter commodity, hopefully we'll be in a better place with the economy. People will start trading more. I'll take a 30% return. I'll take a 40% return. So there's nothing, and I'm not saying that it's not going to go down. I didn't go all in. I plan on dollar cost averaging a little bit from here. So, but I like the range. And from a long-term investment perspective, I said, I like the upside.
I mean, it seems like a fair hybrid model, like almost like a compromise. If you want to dabble a little bit with speculative investing,
right,
but stay in the somewhat safer-ish, psychology of it's a stock. I mean, it's funny to say that, like, oh yeah, it went up 17% in the last month for a stock that's huge. For crypto, you're like, meh.
And that was the thing. It was trading like it. So I wouldn't come in with these expectations with a lot of other stocks, but with this one, I was like, I'm willing to throw, a smaller percentage of my portfolio at it and see what it for portfolio specifically within stocks, just to see what happens. Again, a lot of times when I'm investing, I'm looking for something anywhere from that 10 to 20% return long term, because it's very reasonable, it's very doable, and you will make a lot of money, just as Warren Buffett making 20% year over year.
Absolutely. I mean, and that's the key there that we actually haven't hit on in a little while. I'm surprised. It's this mentality of what you're going to do with it. If you're going to trade, if you're going to do day trading, come in and come out, like, you're going to take much bigger risks. But if you're talking about long term, if you're talking about holding on to this for a couple of years, I mean, then it becomes much more enticing, because now I see it going from, where it's at 60 to potentially going upwards of 200 like it was before. I mean, it was at 386 or 389. Or no, 368. I'm dyslexic today. Just today. So, I mean, but again, even if it never hits that all-time high, but hits half of that, you've more than doubled what you're at.
Exactly. So that's that. Like I said, in investing, we talk about this probably not enough. But you always have to start with the end in mind. Coinbase, was Coinbase a good buy for me? The answer is not yes or no. It depends. What is your expectation to get out of this? Don't make a trade on anything until you know the end in mind. If you are like, well, I want to hold this for a week and I'm just going to stick in $10,000 and I'm going to try to make 50%, that's those expectations can define whether or not it's a good trade or a bad trade in that situation.
Well, I mean, we've talked about it in the past, and it's emotions drive the market.
Absolutely.
And emotions drive mistakes. The best way to get consistent returns on the market classically has been to get more logical. Remove as much emotion as you can from it. Otherwise, if you're fear driven, you're gonna make mistakes. You're going to buy high and sell low, which is the opposite of what we want to do.
Yep.
So the one bit of advice that helps drastically with this, and I can't stress this enough, is start with an exit strategy. Start with an end in mind. Like, that's a huge.
And stick to it. Don't get greedy.
I mean, if there's any actual advice I could give anyone out there, and we don't give financial advice here, but this is just life advice that happens to work for investments as well, is when you have a goal, when you start anything, when you have an investment, start with an exit strategy already. That way, you know what you're going to do. You're going to pull out profits when you can. You're not going to get greedy, because that's when you make mistakes, and you're not going to get fearful, because that's where you make mistakes.
You know what? This is actually super good dating advice. Okay. Yes. Like, seriously, if you are going out with somebody, if you're a chick and you're like, okay, well, like, yeah, he's, he is a bodybuilder and everything.
Chick in the least sexist way possible, I guess.
I don't give a damn. So the point is, it's like, if you're a girl and you are got glamour muscles, he's into we don't even know what that is. Like, we're still waiting for the experts to come out once they're done finishing what a recession is defined as, to tell us what a woman is.
If you are a she/her.
So the point is that when you're going out and you're doing this, and if you're with a guy and he loves the gym and a gym rat and all that, and you're like, okay, yeah, this is a nice little phase, but he's not marriage material. I'm not bringing this guy back to mom, kind of a thing. You're going out with him with the end in mind. So guess what? Maybe don't let that relationship last for 5, 6, 7 years. Keep it to a few months and get it over with. But then if you meet a guy and you're like, man, he's got a great personality, makes decent money. Everybody's all about the 6 feet thing now. Sorry, dude. But it's one of those things. It's like, and you're like, hey, this is somebody I could really see myself building a life with. Well, then treat that relationship like that. So there you go.
Well, and you know what? Just to jump on that and to kind of show the synchronicity of the world and the universe, I just had this conversation with a group recently, and it's look at your relationship with your finances and your relationship with money. If you treat your money like you would treat any other relationship, then I mean, it'll show you what it's going to do.
Oh, absolutely.
So are you dating your money? I mean, it sounds silly, but is it a casual date? Are you having a one-night stand where you're like, oh, this is fun and I don't care what I'm doing with it, I'm just spending it? Or are you getting to know your finances? Are you like committing to what you're doing and looking at the long-term benefits? The problem is most people, when it comes to their money and their finance and their investments, are casually dating. They don't take it seriously. They just say, oh, well, you know, I know enough to know enough that if I throw money at it, something will happen. It's like, well, yeah, that's like going out and playing the numbers and saying, if I hit on 20 girls, one of them will go home with me. I mean, some people like that. That's good for you. I'm not knocking you, you know, that's great. I know a lot of people that have worked that way. But if what you're looking for is sustainable growth, a good relationship, start with the end in mind, get to know them.
Mm-hmm.
Don't be afraid of commitment.
Nope.
It all works together.
It's the way to do it. Yeah. All right. With that, we're going to wrap it up today. Hopefully
of relationships and dating, wrap it up.
That very good advice. So
always protect yourself and your investments.
Kids are expensive. We can tell you about that later. Yes. All right, everybody. Thanks so much for joining us. Hopefully this week you learned a few things. We will continue to sift through all the crap for you. Hopefully bring you nothing but the most accurate information we can do. And until we talk again next time, just get out there and make more money.
Hell yeah.
Hell yeah.